Alright guys, welcome back to another video with me. My name is Dustin Myers. For those of you that are new here, welcome to the channel. And if you haven't already, definitely hit the subscribe button because I post pretty awesome stuff. But with that being said, let's get right into the video. So, I recently did deposit some money into my Robinhood account, so I really like to be super transparent with you guys because I don't want to lie about my Robinhood portfolio. Otherwise, I would never get any subscribers, and I would just look like a jerk. And I don't want to come off like that, but my portfolio balance, if you did not watch my previous video, the Iron Butterfly strategy, which I'm actually making this video based off of that, but if you did happen to watch that, you would have noticed that my portfolio was definitely wasn't anywhere near 25K, and you're probably like thinking, how did I make like thousands of dollars in just a couple of days? Now, no, I am not that good because I don't have that amount of money in my account to even just make $1,000 in a couple of days by selling options. So I just want to let you guys know that I did deposit money, so I am here for transparency. So getting that out of the way, let's get into the conversation of discussion. So like I said, I just made a video called the Iron Butterfly Strategy. If you guys haven't watched it already, do be sure to watch it because it is a video that kind of talks about how to enter an Iron Butterfly and actually talks about how you should trade it. But I did mention in that video that I was going to backtest it for you guys and actually show you guys how it works out and if I'm going to actually try it out for myself, because I have thought about it before, just never have done it, and I know it's a good strategy and you get paid to do it, so you can always roll it, adjust it, and fix it to make it a winner every single time until it just kind of gets to be messy and sometimes you gotta accept the loss. Not every trade's gonna be a winner. But with that being said, I am going to go back here on Robinhood and we'll show you the stock of choice. Big guess right here, AT&T. Go figure, I showed that in the last video, so it shouldn't be a surprise that I'm using this stock. So what I want to do is I want to find high and low points for the stock to, basically choose my strikes, my wings, and then my middle strike. That way I can just, make an adjustment. And we're basically making an adjustment off of a 1 year time frame, and we're just testing it out. Now, I know the price is like, okay, we know what the price was because we're going back in time. I know that, but we're not going to sit here and make a big deal out of that because ultimately at the end of the day, we use, the previous charts to make a decision. So please don't give me a hard time about that. That's just how it goes. So for these longer time frames are going to be for the later approaches. The third and fourth approach is going to be these, these more higher prices here. So like this price, we're going to use it for, the third and fourth approach because the closer you are to expiration date, you're not really going to get anything out of for credit or anything. Like you're not going to really make much money because the premium is pretty much decayed off at that point versus options that are super far out have more premium in them. So you can choose higher strikes with options that are, further out till expiration. So for the first approach, we're going to basically use, something around, like, let's say, a kind of like a high around here, like a $31. So we could probably do it with like a 32. Now it's going to be different on TD Ameritrade. So let's just go over on TD Ameritrade and just show you like the highs and the lows that I prefer to use. So here we are on TD Ameritrade. As you can see here, this is right after the March crash. So looking at the chart here, I think that this low would be a good price point because we can always make an adjustment to this. And I honestly think that just like doing something around like 33, that's a good couple bucks away, because we gotta remember volatility is like really bad here, so we want to kind of play it safe. And the premiums probably are worth a lot because this is March. But once we get further into this, video and get on to the other approaches, then we can actually use the chart from, fast forwarding. We'll see like some more charts and we'll be able to make a better analysis. So at this point, I am going to speed up the video. I am going to also enter these trades. I'm going to do them individually. I don't recommend doing that. I'd recommend doing them all in one transaction. But TD Ameritrade's kind of weird about this stuff. So I'm just going to basically enter the whole trade individually, and you'll see that in a second. So I'm going to speed this up. This is going to be the first approach, and that is going to be 1 month till expiration. We'll let you know what the results are afterward. Alright guys, so as you can see here on this little number right here, we are doing pretty good. We made $2,000, but you got to keep in mind that these are all 10 contracts, and this is just kind of one of those things where it's like the more you enter, you got to have, more collateral and stuff. So keep that in mind. Most people only be a couple of contracts because they don't have all kinds of collateral. And this is going to be a lot of collateral because the strikes, like literally, this is 26, and a 30 and a 33. So we're going to probably, I believe that's $700 in collateral per contract. And yeah, I'm not going to get into that because that's going to be confusing. So let's just not focus on that. Let's just think of it as like we got, one contract. So just take all this divided by 10 if you really feel like it. But with this trade, what I did is I sold my call and sold my put at a $30 strike price. So that's the price where it has to land exactly on the dot for me to get my max profit. And as you can see here, literally, this is at $30.09. So it's like our profit's just like right there. And because we are selling time and volatility is just through the roof right now, this trade is going very well for us. But if we were to have hit like a 33, we would have had a lot less profit. But the call that I bought was a 33 strike, and the put that I bought was a 26 strike. So we had to stay in between these two prices in order to be profitable. Now, if we speed this up towards the end of the day, really quick here, and then we'll get into the second approach. This expires on May 1st, as you can see here. I mean, look at this. This is like so nice. So that's heaven right there. That's so much money. But yeah, that's a pretty good first month trade. But don't expect that because volatility was just crazy with all stocks during this time. So into the second approach. The second approach is going to be a 3-month time frame. So we're going to reset this for you, and we're going to pick something 3 months out. So I'm going to speed up the video, come back in a couple of minutes when I'm done to see the results. Alright, welcome back guys. So oh my god, I'm in heaven. This is so awesome. So with this trade, this one was 3 months out like I just said previously, and what I did was I kind of found because we were way back here, I think somewhere around here, and I did choose that 30 for the middle strike. I'm just so used to it now, I just feel like 30 is just a good pick. Now, back in the day, if it was back last year, I probably wouldn't have picked that, but for the video, I'm just picking that. So right here, I found that it found some decent support at 27, so I picked a 27 for my buy put. And then I saw that it got rejected around like the 31 or something like that. So I stuck with like 33. I don't know if I was this far, but I just kind of stuck with 33 because that's what I did in that first 1 month approach. And I just felt pretty good with me. But I mean, that's always going to change, based off of market conditions and, how things go. But so we got the trade right here. So we basically bought a $27 put, and then we sold a call and a put at a $30 strike, and then we bought a call at $33. And for that, we received a credit of $2,220. And as you can see here, AT&T is sitting at $30.25. And in order for us to just basically hit the jackpot, completely, it would have to be at $30 on the dot. Because as you can see here, there's still some wiggle room. But with that first approach with the 1 month, I guess I was a little bit wrong about the volatility, because I think that we still collected about the same amount of credit. So I think that that didn't really have an effect. But on to the next approach. So approach number 3 is where we can use these higher price points and stuff, because we're so far out. I mean, we're 6 months out at this point. This is going to be the third approach. So I'm going to speed up the video, pick some strikes, and we'll see you in a bit. And I'm also going to reset this. So see you in a bit. Alright, welcome back, guys. So here we did collect a little bit more premium, but that's because it was 6 months out, and we were able to pick a higher strike because it was 6 months out. And that's just how it works when you sell options far out. They have more premium incorporated into it. But I noticed with that last approach with the 3 month that I think we crossed into this $33 mark, so that would have been kind of where you would have made an adjustment to your upper wing. Just as an FYI, this is something to keep an eye out for, because this does come up while your trade is going on. But time decay is kind of working for you, in a way too, so you might be able to catch up with that. But I don't think time decay is, gonna get you everything you need. But, this is just where you would have made an adjustment right here. You kind of would have gotten a little nervous. But like I said earlier, this is a trade where we are receiving a credit, so we can always roll it and fix it and make an adjustment to it so we can win. So with this one, as you can see here, what did I do? I got a same sell call and sell put $30 strike, but this time we picked a 34 strike because of what I just showed you, and then we are buying a $27 put. But as you can see here, where is it? AT&T is at $29.22, and I think in the previous ones that I showed you, the previous trades, it was a little bit closer to our price point. I don't remember, I didn't pay attention, but we are pretty much at a more than 50% of our profit has been collected. And for this type of trade, I mean, I could have sworn I said it was like a $700 worth of collateral. So, right here. I didn't even think about this. So, $7,000 in buying power to open this trade for literally $1,880. And, or not, yeah, I did say that right. So that's a pretty good return on investment, but we're not going to talk about the ROI on that. We're actually going to give you the ROI on the fourth approach. So let's get into the fourth approach. So with this one, since I am in January, and that's like only a couple of months, that's just past just now. This is literally January this past year. So I'm just going to go back to April of last year, and then I'm just going to do an expiration date for April as of this year. So this one's like literally just happened. So I'm going to reset this, and we're going to be right back, and we'll see you soon with the results. Alright guys, welcome back to the end here. We are at the very end here. So this is 1 year out. Well, actually, sorry about that. It's not 1 year. It was only I think it was 9 months. Because they only give you so many options available. And I know that I said 3 months out, and I couldn't find an August one. And then when I went to do the 6 month one, it was you couldn't get it exactly 6 months. So I did it as close as I can. Sorry about that. I know I said a year and stuff, but that doesn't really matter, because what matters is this number. So, this is an incredible strategy, and I am going to definitely try this strategy, but I'm going to start with a 1 month one here, probably on Friday. Here I'll probably open one up with AT&T, but this stock is literally perfect for this. I mean, you've repeatedly seen all this. And keep in mind that you receive this as a credit initially. So your buying power on Robinhood would be if you had $100,000 in buying power and you open this trade, you would automatically receive $3,750, so $3,750 right away. And then you also got a return of $2,985. And if I get a little calculator out here on my phone, and we take 3,750 plus 29.85, we just made $6,735 on a trade that literally had a buying power effect of $5,000. We had to put up $5,000 of collateral on this trade, and a trade that we can literally adjust and make it to where we cannot lose. This is probably better than credit spreads. That's why people always literally say 50x your money with one freaking dollar. It's crazy. So the returns are fat, but you got to understand how to use this and use it with the right stock. And I think this is a great pick. But ultimately, this increases your buying power by this, and this would increase investing. So if you had $100,000, well, now you have $102,985. So that's pretty good. But let's actually get an ROI calculator out, because I'm not that smart. And let's see how much this ROI is. And we're going to just do it without the fact that, yes, we've made $2,000 and then we also received a credit. We'll just erase that. Actually, nah, we'll show you. We know you want to. So, where's that ROI calculator? Right here, I think it is. Starting investment. So, $5,000 into, what was that? $29.90. Internet. So, can I add 5,000, and we can take 7,990. Calculate it. Boom. That is literally a return on investment of 59%. And that is over the course of 9 months. But that doesn't even include the fact that it's actually a profit of $6,735, like I just mentioned. So we can take this and basically make it 11,735. I think I did that right. 134% return on your investment with this trade. That is incredible. So with that in front of your face, I think that should give you an idea of why you should use time on this. And all 4 approaches do yield some decent profit with this stock. But remember, this is not a guarantee. And I am no financial expert, so this is just strictly for entertainment purposes only, but all in all, this is a great strategy, and I will be incorporating it. So, thank you guys for watching the video. Definitely leave a thumbs up on the video if you liked it, because I know I did. I got a lot of satisfaction out of this. But that's all I got for you guys now, so see ya.